Hi, this is Zak Mir, editor of Spreadbet Magazine, with an update on the recent bullish call as far as the US indices were concerned. That was sort of earlier in October, and I was looking for a big target here towards 16,400 for the end of the year. So far, we've reached 16,000, and it looks as though we've done this relatively easily. The big sticking point was a May resistance line running through 15,800. There was a flag below that, sort of a fake out in terms of making traders think that there was going to be a failure there, maybe a push back towards 15,300 or 200 again. But really, the whole story here has been the one-touch rebound off the 200-day moving average at the beginning of October, almost exact to the number where the 200-day line was, and then straight up. And it really has been a triumph for technical analysis. And if you add in the RSI support line as well, which has been multi-tested around 60, 65 in recent weeks, you have just a sort of an ideal technical backdrop there. And really, as far as the Dow is concerned, you would have thought now that the minimum, while above 15,800, will be 16,400, the previously sort of announced target. 10-day moving average at 15,792 as well, just backing up any near-term weakness in this market. Moving on to the S&P, which was actually the leader as far as the US stock market was concerned. It's well ahead in relative terms compared to where the Dow is. The top of its channel from May is up at 1810, 1820 now nearly, and we've had a sort of a bull flag well above previous resistance in the 1700 to 1730 zone, 2030 zone, and bounce off the 20-day moving average earlier in the month. And really, this looks like it was a mid-move consolidation. We could be due for sort of 50, 70 points, equivalent to the first leg of the October push higher. And so 1810, 1820 is about the minimum we'd be looking for there. Something to note as well is that if you see that there's a February resistance line projection that I've drawn from the beginning of the year, and that's really heading up to 1950 as a possible optimistic end of 2013 price target. So above 1820 could take the S&P up to 1950 as a best case scenario. It's very believable, especially when you have the dovish comments by Yellen over the last few days. So really, a runaway move for US stocks. That's it from me. See you again next time.